Hi, Lee Phillips here. Question on the due on sale clause. Basically, I'm going to call it exceptions to the Garn-St.Germain Act. Garn-St.Germain Act was passed in 1982 as a result of interest rates spiking through the roof, and the banks going, oh my gosh, we're getting screwed. I mean, this isn't good for us, because that time all of the loans were transferable. You could assume the loan. And in fact, the first house I ever bought, I assumed the lady's loan. And by the way, I got a smoking interest rate. It was only 12%. And the lady had a 5 or 6% loan, and I assumed her loan, and then I paid her the difference. She made a good deal. And the bank is going, I didn't get the extra 5%. This lady got it. So they had Senator Garn and Senator St.Germain put a law into place which says if you sell or transfer the unit or the house, then the loan is automatically called. It's due on sale. So, okay, I'm going to deed my piece of property into my living revocable trust. You're going to probably use a quitclaim deed, because we're basically moving it from your pocket here over to your pocket here. We move it from one pocket to the other pocket. All of the warranties go with it, because the warranties are to you and it's from you to you. So we don't need a warranty deed. A quitclaim deed is just fine. It's not a quick claim deed, it's a quitclaim deed. You quit claiming any interest in that piece of property. So, question is, does the mortgage company accept the quitclaim deed transfer? And the answer is yes. It's an exception under the Garn-St.Germain Act. It reads, a transfer into an inter vivos trust. That means a trust that you make while you're living that takes effect during your life. Transfer into an inter vivos trust in which the borrower, that's you, is and remains a beneficiary. So you get the benefit of the house or the piece of property still, the trust, and which does not relate to a transfer of rights of occupancy. You continue to occupy the house, not somebody else. So as long as it's the standard inter vivos revocable trust or living revocable trust for estate planning, yeah, I move it from my pocket here to my pocket there. I continue to live in the house. I get all of the benefit of the house. Everything's cool. Now, by the way, what happens when somebody dies? Well, there's another exception which talks about if we transfer because of death. That is not going to trigger the due on sale clause. So, in a sense, they've got you covered. However, if you're a real estate investor and you're using land trusts and you're selling the beneficial interest, it says is and remains a beneficiary. You just violated the due on sale clause. But as far as the type of deed, for this type of transfer, you're going to use a quitclaim deed, and you don't have to worry about the due on sale. By federal law, the mortgage company can't do anything to you. You keep your mortgage just like you always have. And in fact, they can't raise the taxes at the state or anything else when you make the transfer into the living revocable trust. So it works pretty good. Now, sometimes you do have to notify the state. For example, in California, Proposition 13 says every time you transfer a piece of property, the state gets to increase the property tax or readjust the property tax. It's usually up. So how do we get out of that? Well, you get out of that by when you make the transfer into the living revocable trust, you notify the state, hey, time out. This is a transfer into my living revocable trust, movement from one pocket to the other pocket, no big deal. We get the exception at the state as well. So, talking about transferring assets basically into a living revocable trust. Oh, I want to say one more thing though. If you transfer the asset into an LLC, no, that doesn't apply to Garn-St.Germain. That's a transfer. That does trigger the due on sale clause. Oh, but nobody has ever had the mortgage company come after them, have they? Well, the fact of the matter is, since 1982, interest rates have gone just like this. So no, the mortgage company isn't going to go after anybody because their loan that they gave you up here is better for them than the loan that you would get today. And, you know, there have been little ups and downs, but basically that's true. If interest rates spike back to 15% like they did in 81, yeah, they're going to start calling the due on sale clauses. Any rate, just a thought.